Hello everyone, welcome to today's US Open live webinar. It is Tuesday, October 24th, 10 minutes before Wall Street opens as usual. I am your host, Nikos Zabouras, Senior Financial Editorial Writer at FXCM. It is a packed week. The bond market is in the spotlight after a couple of comments from iconic high-profile investors that helped it rebound. But the week has so much more as key events are coming up, with the European Central Bank announcing a pivotal rate decision on Thursday. Equity markets are also front and center. Oil giant Chevron announced a big acquisition yesterday, pointing to a consolidation trend in the energy industry. But now focus shifts to mega caps like Meta and other tech giants dominating this week's busy earnings calendar. That's what we will be talking about today. But before we begin, as always, please read carefully through the risk warnings and the disclaimers. Once again, please read carefully through the risk warnings and the disclaimers. Bear in mind that anything discussed here does not constitute investment advice and should not be taken as such. I will give it a few more seconds and then we will begin. Okay, let's get the ball rolling because, as we said, it's an event-packed week and we have many things to talk about. We're going to start off a little bit with the situation in the bond market in US yields, and how, of course, they impact the US dollar and Euro USD ahead, of course, of key events, as we said. Then we're going to talk about the M&A activity in the oil industry after Chevron announced a key acquisition just days after Exxon had done something similar. And then we're going to talk about oil prices as well, the technical outlook of US oil. We're going to move to the NASDAQ. And then we're going to talk about the key incoming earnings from mega caps like Alphabet, Microsoft, Meta, and others. And the rest of this week's key events highlighted by the ECB on Thursday. So in terms of the yield talk, we have already spoken of the rising US bond yields that have worried some Fed officials and led to this dovish remarks recently. But Chair Powell did not intervene, let's say that, since he said in his recent interview that they need to let this rise play out, essentially. However, high-profile fund managers did talk about yields. After the 10-year yield hit 5% for the first time since 2007, Bill Ackman of Pershing Square tweeted that he has covered, the company has covered the bond shorts since there's too much risk to ignore bonds at this stage, while co-founder of Pinko and often referred to as the bond king, Bill Gross, said that yield spreads will turn positive and spoke of looming recessions and said that the higher for longer narrative that we have talked about from the Fed is yesterday's mantra, essentially saying that there will be no more hikes because there will be a recession. Of course, this commentary, mostly from Mr. Ackman, boosted the bond market and sent yields lower, and of course the US dollar with it. US equities got a minor lift, but it was limited in the stock market. So as a result, Euro-USD benefited and broke above the 200-period EMA yesterday, but fell short of the other critical level that we have highlighted over these past weeks, the 38.2% Fibonacci, and actually turns negative today, partly due to poor European PMIs, mostly poor European PMIs. Last week's gains for the pair were a sign of the limitations in USD strength, and the pair has the ability to take a crack at the overhead resistance that we just mentioned. However, the upside still looks unfriendly. Below this 38.2% Fibonacci, and even more so below the 200-period EMA, the black line that is bouncing around since yesterday. Below that, there is room for new 2023 lows, which are located at 1.0447. However, it's hard to make any meaningful calls here. I would say technicals, it's hard to rely on technical analysis because of the slew of high impact events that we expect, including the ECB on Thursday, that can spur volatility and, of course, determine the path of the pair. We will talk about more. We'll talk about those events more towards the end of our session, as always, in the what's ahead section. Now, before we move to USOIL, I want to talk a little bit about Chevron that we see here on our chart. It is the second largest energy company in the US and announced yesterday the proposed acquisition of Hess Corporation, and which actually points to a consolidation in the oil industry, given that its bigger rival Exxon Mobil had announced a buyout agreement of Pioneer Natural Resources a few days back. Both, of course, were all stock deals in excess of 50 billion, in the 50 to 60 billion range. And as I said, they point to consolidation. What has happened in the oil industry is that over recent years, there has been underdevelopment, mostly due to the transition to clean energy. That's where money goes. And these oil giants are cautious about investing in costly and time-consuming exploration and extraction of new oil projects, right? So they try to increase supply with the faster and lower risk M&A activity. Of course, this also shows that they believe, especially in the US, because in Europe, energy giants in Europe have been more attuned to this transition towards less fossil fuels, let's say. But in the US, they have been more persistent on that. These are two key factors in play here. However, this can affect oil prices because such activity boosts synergies and economies of scale and can bring prices down. But of course, that's just one aspect of the oil price narrative. Now, both companies dropped yesterday. You can see here Chevron, a big drop despite the acquisition, and Exxon Mobil also dropped yesterday, and when it had announced its own proposed acquisition a few days back on October 11th. Now, having said that, let's turn to US oil. You can see it was pressured yesterday and it is pressured again today, partly, of course, because of the potential for more oil output, and it concedes the 200-period EMA. It has been largely inconclusive over the past few days as markets monitor mixed signals from the Middle East. The conflict appears to be contained for now, as Israel has not moved into the Gaza Strip yet. But of course, there's also a risk of further escalation and a spillover in the region in this important energy hub. At this stage and below the 200-period EMA, immediate bias is on the downside, and there is room for new October lows at around 81.5, the current ones. But given this situation in the Middle East, it's hard to see sustained weakness for the commodity, and especially below 77.57. Now, even though it is pressured, we have seen that previous visits below the 200-period EMA, the black line, have been short-lived and have been contained by the ascending daily Ichimoku cloud, this blue cloud that you see, and there's definitely possibility that the same can happen again. So the commodity definitely has the opportunity to regain their initiative, given technicals and fundamentals, but does not inspire confidence for big gains at this stage that would tackle the 95, 96 region and set new 2023 highs. And with 2 minutes into the Wall Street session, let's turn our focus to the Nasdaq, which of course awaits earnings from tech giants, including Meta and Amazon, but we will talk about that in a bit. Of course, these earnings can definitely determine its trajectory. So we talked earlier about this easing in the rising bond yield. They pulled back, and this partly due to those comments that we said by high-profile investors, and this definitely helped the Nasdaq, but limited because it was a narrative of impending recession and high risk, so it couldn't benefit too much. It holds above the 200-period EMA, the 200 days EMA, the blue line, but and that gives its prospects, its hopes for renewed rise in play, but it will need help from the incoming events in order to make a meaningful rebound towards the 2023 highs located at 15,946. Now, these recent losses and the fact that it now has moved below the 200-period EMA definitely creates risk for further decline towards the 38.2% Fibonacci. It is the 38.2% of the rally from the 2022 lows. But again, there would be the need for some strong catalyst to drop even below that. And we'll keep the Nasdaq on our screen, but we're gonna talk about what's ahead now, starting of course from the earnings. Alphabet and Microsoft are due tonight, social media giant Meta Platforms on Wednesday, and e-commerce giant Amazon follows on Thursday, all after Wall Street close. And of course, they dominate this week's earnings calendar. These are all mega caps, typically companies above 200 billion market capitalizations. They're members of the Magnificent Seven group and at the forefront of artificial intelligence. Their results can affect market sentiment and the trajectory of the Nasdaq. And markets will try to gauge how much more the AI boom can give to those companies and to the stock market. Microsoft and Alphabet are main contenders, AI contenders, but have not been able to turn the technology into a prominent revenue and profit generator the way that NVIDIA has. Meta is one of these year's stars after the very bad 2022, as investors like its cost-cutting efforts and its renewed emphasis on artificial intelligence. And of course, we have Amazon, which comes from blockbuster Q2 report. Now we expect the Q3 results, and it also upped its AI game with its stake in Anthropic, a company that has developed a ChatGPT rival called Claude. However, it faces continuous regulatory hurdles, and these are highlighted by the recent anti-monopoly complaint by the US FTC. Now, on non-earnings, we also expect Australia's CPI inflation on Wednesday. Inflation is past its peak and has allowed the RBA to stay on the sidelines over the last 4 meetings, but policymakers have kept the door open to further tightening, and Governor Bullock reiterated that today, mentioning the risk of a slower return to the 2% target. So definitely important data there for the Aussie. Later on Wednesday, we have the Bank of Canada announcing its rate decision and updated projections. It had paused in September after 2 straight hikes and had expressed concern around the persistence of underlying inflation pressures, keeping more hikes in play. However, the latest CPI data headline Encore showed an easing in September, so that could perhaps allow them to hold, but we're going to have to see. And of course, on Thursday, before our next session, the ECB announces a pivotal rate decision. Back in September, it had hinted to peak rates, and inflation decelerated substantially in September, while economic activity is sluggish is probably an understatement, and Germany is expected to contract by 0.5% this year, according to the IMF. Baseline expectations for this meeting is for a hold. If policymakers do hold, it will be the first pause after 10 consecutive hikes worth 450 basis points. So that's pretty much it. Of course, more events are coming up, including Powell, a speech from Mr. Powell this week, despite the communication blackout period, but that probably means that he won't comment on policy. And we also have, in a few minutes, PMIs from the United States, and of course other events, but most of the ones until our next session are the ones that I highlighted. That's it from me for today. Thank you for joining me.